Hello, April. Okay, thank you so much. Can you guys hear me now? Hi, David. Please, if you can hear me clearly, please just indicate. Everything is cool. Great. Okay, perfect. Perfect then. Perfect. Okay, kindly like our live video, please, while we start with our class. Okay, great. Thank you. Thank you. Thank you for the confirmation. Great. Thank you, young Bera. So should we start with the class or give 2 minutes for others to join? I think others joined the previous live, but the sound was not the best, so they had to leave. So I just sent the new link. If you can hear me clearly, then that's a blessing. Yeah. Please do it to like the live video. Okay, thank you. Thank you so much for the confirmation. Well, our class is normally supposed to be 1 hour. Yeah, so if in the next 2 minutes the others are not here, then we are just going to start. Thank you so much for the compliment, young Vera. Thank you. This live will be recorded and posted in the Telegram, right? I think when you're having a live stream on YouTube, YouTube automatically records it and posts it. So this live stream will be posted on my YouTube channel. So after this, I'll just share the link to the Telegram channel. John, thank you so much. All right, so while we wait for others to join, let me introduce myself. I am Emilienne Pedrandem, aka FX Buddy. The FX there means forex, like forex buddy. Yeah, so I'm a forex trader. I've been trading forex for 1 year, 4 months now, and I am a master's degree holder in accounting, and I also have a business, a clothing brand. Yeah, so that's a little background of myself. And organizing this particular class, it's not because I am a professional trader, it's not because I am an expert at forex trading. It's because I just want to share the little knowledge I have, the little knowledge that has been helping me in the forex market with you all. Mind you, it's a beginner guide class, right? So it's for those who, okay, you've been hearing about forex, but you don't know what to do. You don't know how to go about it. You don't know what forex is, and also it's just a synopsis class to just enlighten you on what forex trading is. And in the course of this, I'm going to be sharing my trading strategy, right? So the trading strategy that has helped me to gain confidence in the market, to make money in the market, to make losses in the market too. So I'm going to be sharing all that with you. So today is day one, and day one we are going to be looking at the introductory part of forex trading. So I hope you guys are ready. So you guys need a book, you need a pen, because I give a lot of notes. Yeah, because I believe when you're learning you need to take down notes, not like taking down notes, but at least jotting some stuff down so that in your free time you can go over them and all. So today we'll be starting with the introductory part of forex trading. Guys, I was born a stammer. I stutter, right? So In the course of talking, I'll need to like break, catch a breath, because if I talk too fast, I'll stutter too much and it will be very, very obvious. Yeah. So you guys will bear with me. I have the knowledge and I want to give it out to you guys. Yeah. So you bear with me. There are some times that I'll talk and I'll break because I need to catch my breath before talking. Right. So are we ready? Do we have our books, our pens, our phones, internet connection? Can we start? Okay, thank you guys for understanding me. So if you're ready to go, comment start. So we kick active. Okay. All right. Start. Okay, perfect. So 31 of you should like this video. I'm seeing just nine likes here. But then, so we can start. So we'll start with the introductory part of forex trading. So our first heading is Introduction to Forex Trading. Introduction to Forex Trading. I know a lot of us have, in fact, everybody on this live has heard about forex trading, right? Everybody has heard about forex trading, how it works, a lot of things. Now, what is forex trading actually? To break it down, I always keep it at the simplest level, right? So we start with the first. What is forex? Question mark. So that's our first heading. What is forex? Now, forex, as the name, keeping it simple, forex simply means foreign exchange. That is all. Those of us who did economics, we must have heard about foreign exchange, about the foreign exchange market, right? So forex simply means foreign exchange. Next, what is trading? What is trading? Trading is just the buying and the selling of goods, services, commodities, and all. Right? Quick a quick one. When we're having a class, there'll be time for you guys to ask questions. For now, let's have a smooth class, then questions can come afterwards, please. Yeah, so we have given the definition of forex. Forex simply means foreign exchange, and trading means buying and selling. Now, our topic of discussion is forex trading. Now, what is forex trading? Putting together the definition of forex and the definition of trading, we have a good definition of forex trading as the simultaneous buying of one currency and selling of another. Are we there? So forex trading is the simultaneous buying of one currency and selling of another. So that's our definition of forex trading. The simultaneous buying of one currency and selling of another. That's our definition of forex trading. Are we there? I need to ensure that we are going at the same pace. You're welcome. You're welcome. Thank you guys for joining. Are we there? Have we gotten the definition of forex trading? Okay, perfect. Okay, perfect. If we've gotten the definition of forex trading, now let's take down the advantages of learning how to trade forex. The advantages of learning how to trade forex, that is reasons why you should learn how to trade forex. So let's take down the advantages of learning how to trade forex. First advantage, The forex market is the largest financial market in the world. That's the first advantage. The forex market is the largest financial market in the world. As at the last time I checked, the forex market runs $6.6 trillion in a day. Guys, that's a lot of money. So the forex market is the largest financial market in the world. As at the last time I checked, the market runs $6.6 trillion in a day, meaning there is a lot of money for you, young bearer, and I. Right? So there is a lot of money in the forex market. So that's one advantage, which means if you know how to trade, you can be milking the market. Right? Yeah. Because there is money in the market. There is liquidity in the market. Liquidity means there is availability of cash in the market. Right? Next advantage why you should learn how to trade is that the forex market is open 24 hours a day and 5 days a week. The forex market is open 24 hours a day and 5 days a week. Meaning you can trade in the morning, you can choose to trade in the afternoon, you can choose to trade at night. The market is open 24 hours a day, but just 5 days a week. Remember, professional institutions, they don't open during weekends. So during weekends, the forex market is closed. So the forex market is open Monday, Tuesday, Wednesday, Thursday, and Friday. But all of those five days, the market is open 24 hours a day. Are we there? So you can trade at any time. The next advantage why you should learn how to trade forex is that the market is easily accessible. The market is easily accessible. You could be anywhere in the world and trade the forex market. So long as you have a phone, you have data, you are good to go. So the forex market is very accessible. Everybody can trade the forex market, no matter where you are. You can be in America, you can be in Nigeria, you can be in Cameroon, you can be in the village, you can be wheresoever and trade the forex market. All you need is mobile data and a smartphone. So the market is easily accessible. The fourth advantage why you should learn how to trade is that low transaction costs. Low transaction costs. By low transaction costs, it means you don't need to pay any money to have access to the forex market. Right? You don't need to pay any money to have access to the forex market. Mind you, the link I sent to our Telegram group for you guys to create accounts, did you pay anything to create an account? I guess no. Nobody paid a dime to create a forex account. So the transaction cost to have access to a trading account and to trade the market is very low. You don't need to pay anything to create a trading account. Are we there? So the transaction cost to get into the forex market is very, very low. Glad, yeah. So Pen has confirmed that nobody paid anything to create a forex trading account. It's completely free. So the transaction cost is very low. But some other sectors, maybe you might require a certain amount before you even have a particular account that will give you access. But with forex, it's free. Next, you can trade anywhere. It's the largest financial market in the world. Are we there? I asked a lot of questions because I need to ensure that my precious students and I are on the same pace. So have we gotten some of the advantages of learning how to trade? First, we said it's the largest financial market in the world. Next, we said the market is open 24 hours a day, 5 days a week. Next, we said you can trade from anywhere. The market is easily accessible. And fourth, we said low transaction costs. Fifth, you can trade a lot of things in the forex market. Diversity. You can trade a lot of other things in the forex market. You can trade currency pairs, you can trade stocks, you can trade commodities, right? So the availability of a variety of things that you can trade in the forex market. Somebody dropped the comment. Nalis, I want them. I am sorry about that, but every other person created their accounts free. You don't need to pay anything to create a trading account, like nothing. If anybody asks you for money, come and report to me. I'll be your police. Okay, if we got it, before proceeding, I want to ask two questions. First, what is the definition of forex? Remember, we defined it earlier, so somebody should define it in the comments so I know that okay, you guys are following up. So define forex trading, not forex. Define forex trading. So what is forex trading? Let's have it before we proceed to what we trade in the forex market. That's our next topic. Forex means foreign exchange, yes. Yes, forex means foreign exchange, true. Now, what is forex trading? Remember, we defined forex, we defined trading, and we joined the two definitions together. So now, what is forex trading? Forex trading is the simultaneous buying of one currency and selling of another. Perfect. Newa, you have plus 10 marks in the exams. Yeah, so forex trading is the simultaneous buying of one currency and selling of another. Simple. And now that particular definition brings us to our next topic, which is what we trade in the forex market. Write that down. What we trade in the forex market. That's our next heading. What we trade in the forex market. Remember, we have rightly defined forex as the simultaneous buying of one currency and selling of another. It already tells us that in the forex market we trade currencies. Are we there? In the forex market we trade currencies. We trade foreign currencies in the forex market. So as for what we trade in the forex market, yes, we trade currencies, but we don't just trade currencies alone. Remember, our definition has simultaneous buying of one currency and selling of another. It means two things have to be involved. And in forex, two currencies have to be involved for the simultaneous buying and selling to actually take place. So in forex, we trade currencies, but we trade all these currencies in pairs. So in forex, we trade currency pairs. We trade currency in pairs, like currencies in pairs. That is joining two currencies together so that our simultaneous buying of one currency and selling of another can take place. Are we there? Are we following up? In forex, we trade currencies, and these currencies we trade them in pairs. We trade them in pairs. Okay, great. If we are there, now let's take major currencies. In as much as we have a lot of currencies in the world, every country has a particular currency. We have a lot of currencies in the world, but there are some major countries that have major currencies that influence the forex market the most. So it brings us to major currencies. Now, these major currencies are the currencies that influence the forex market the most. There are the currencies that make the forex market run $6.6 trillion in a day. So they have a major role to play in the forex market. So let's take down the major currencies. Let's take down the major currencies. Number one, USD, in bracket, the United States dollar. So the first major currency is the USD, that's the United States dollar. Next, CAD, the Canadian dollar. CAD, the Canadian dollar. Take note of their symbols, because in forex we don't trade United States dollar, we trade USD. So we actually take the symbols of the actual currencies. Yeah. Are we there? Are we taking down the major currencies? Are we taking down the major currencies? The first major currency is USD, United States dollar. Okay, now Liz, I'm glad you're following up. The second major currency is CAD, the Canadian dollar. The third major currency is GBP, the Great British Pounds. Are we there? The fourth major currency is AUD, the Australian dollar. The fifth major currency is EUR, euro. The sixth major currency is NZD, the New Zealand dollar. Number seven, JPY, the Japanese yen. And the eighth major currency, we have CHF, Switzerland francs. CHF, Switzerland francs. So we have 8 major currencies in forex. We have 8 major currencies in forex. So these are the currencies that influence the forex market the most. So have we taken down the 8 major currencies? If we have, then list them down in the comment section, so I'll know that okay, you guys are with me. Number 7, I think I mentioned JPY, Japanese yen. Sorry about your network. So if we have gotten the 8 major currencies, please kindly list them in the comment section, so I ensure that you guys have copied, you guys have heard the right things. Let's go fast. So the first, we had USD, the United States dollar. Yeah, we have USD, United States dollar, CAD, the Canadian dollar, GBP, the Great British Pound, AUD, Australian dollar, EUR, Euro, NZD, New Zealand dollar, JPY, Japanese yen, CHF, Switzerland francs. Perfect. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so we have 8 major currencies. Nalis has correctly listed them down. Now, remember, we mentioned that we don't just trade currencies in the forex market. We trade these currencies in pairs, right? And in as much as we have 8 major currencies, you guys know that already. Now it brings us to currency pairs. So currency pairs are what we actually trade in the forex market. So these 8 major currencies, when paired together, gives us 28 currency pairs. These 8 major currencies that we have listed, USD, CAD, Euro, JPY, NZD, GBP, AUD, CHF, right? When paired together, give us 28 currency pairs. So we actually have 28 currency pairs that we trade in the forex market. Again, these 28 currency pairs have been broken down into 3. We have major currency pairs. Are we there? I'll take it over again. These 8 major currencies, when paired together, remember, we trade currencies in the forex market in pairs. We trade currency pairs in the forex market, right? So these 8 major currencies, when paired together, they give us 28 currency pairs. And these 28 currency pairs, we have 7 major currency pairs from it. Okay, great. So from our 28 currency pairs, we have 7 major currency pairs. Example of a major currency: USD CAD. USD CAD. That's a major currency pair. That is you joining 2 major currencies together. So a major currency pair is you joining 2 major currencies together, right? Good. USD, JPY. Perfect. So you see how Randy wrote it? USD slash JPY. Perfect. So that's the route, that's the format that you follow to write yours. So for major currency pairs, we have USD CAD, we have USD JPY, we have GBP USD, we have USD CHF, Samuel. Samuel, that's not a major currency pair. Euro card is not a major currency pair. Now, another characteristic of a major currency pair is that it must be paired with the United States dollar. It must be paired with the USD. Right? Because in as much as we have eight major currencies. USD is the boss. USD is the king, right? So when placing our major currency pairs are pairs that are traded against the USD. So I'll list them out. Yes, we have Euro USD, we have USD card, we have USD JPY. Somebody wrote card USD. Well, that's actually wrong, because in the forex market, all these quotes have been placed, right? And the forex market reads the card and the Canadian dollar and the United States dollar pair as USD card. So USD comes before card. So it is somehow standardized and has been placed like that already. So I'll list out the 7 major currencies and you copy. Should we go? So the first we have USD card. USD card is my favorite pair. Next we have GBP USD. Perfect, Samuel. Next we have Euro USD. Next we have USD CHF. Next we have AUD USD. Which have I not given? Next we have NZD USD. I've given 6. It's left 1. USD JPY. Have I called that? So that's 7. So we have 7 major currency pairs. Remember again, major currency pairs are pairs that are traded against the USD. That means they must have USD attached to them. Are we there? So have we written down the 7 major currency pairs? I'll take them all over again. We have GBP USD. We have USD card. We have USD JPY. We have Euro USD. We have AUD USD. We have USD CHF, and we have NZD USD. So those are the 7 major currency pairs. If you have paid attention, you'd see that all of them have USD attached to them. All of them. All major currency pairs have USD attached to them. So that's a characteristic for major currency pairs. Have we gotten the major currency pairs? There's a dog barking behind me. If we have gotten the major currency pairs, now let's go now to the minor currency pairs. Okay, great. So we are going now to the minor currency pairs. Remember, we said we have 28 major currency pairs. Within these 28 major currency pairs, we have 7 of them that are major currency pairs. We have listed them out, right? It means the remaining 21 are minor currency pairs, right? So we have 7 major currency pairs and 21 minor currency pairs. And If an advantage, if an not advantage, if a characteristic of a major currency pair is that it has USD attached, they are pairs that are traded against the USD. It means minor currency pairs are just currency pairs that are not traded against the USD. Minor currency pairs are pairs that are not traded against the USD. Meaning a currency pair like AUD/JPY is a minor currency pair because it does not have USD attached. It's not being traded against the USD. So we have like GBP/JPY, that's a minor currency pair. We have AUD card, that's a minor currency. We have Euro card, that's a minor currency pair. Are we there? So minor currency pairs are pairs that are not traded against the USD, while major currency pairs are pairs that are traded against the USD. So we cannot actually list all 21 of them. They are just a lot. Yeah, but just know the main characteristic of either a major currency pair and a minor currency pair. Are we there? We have taken down major currency pairs. We have 7. Minor currency pairs, we have 21. Now we go to the last type of currency pair. This particular currency pair is rarely traded. It's called the exotic currency pairs. Exotic currency pairs. So these are pairs that these are pairs of developing countries paired with the United States dollar. Developing countries like Cameroon, Nigeria, South Africa, here. So exotic pairs are pairs from developing countries being paired with the United States dollar. So an example is USD XOF. The symbol of Central Africa, Cameroon francs, right? In the forex market is XOF. So USD XOF is an exotic pair. The symbol for Nigerian naira is NGN. So the exotic pair for Nigeria is USD NGN. That's the United States dollar paired with the Nigerian naira. Yeah. So exotic pairs are rarely traded because the market hardly moves. The volatility is very low. Liquidity in the market too is very minimal. So these pairs are rarely traded. But major currency pairs are pairs that are the boom, right? The mostly traded because the market moves. Imagine the United States dollar paired with the Canadian dollar. That market automatically moves. The volatility in the market is high. The liquidity in the market is very high as well. So major currency pairs and minor currency pairs, they tend to move faster. They tend to have movements than an exotic pair like USD XOF, USD NGN. So is that clear? Are we good on currency pairs? Are we good on currency pairs? Okay, great. If we are good, then I would like to ask a question. How many major currencies do we have? 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 Listen to the question well before answering. How many major currencies do we have? 8. We have 8 major currencies. Newa, you have 10 marks again for the exams. Yeah. Young Bera, very, very good. So we have 8 major currencies. Remember, currencies are different from currency pairs. I knew it would be somehow technical. Yeah. So we have 8 major currencies. We listed them out already. USD, GBP, AUD, NZD, CHF, Euro, JPY, and AUD. Yeah. So we have 8 major currencies. 8 major currencies, and we said when these major currencies are paired together, they give us 28 currency pairs, right? And in these 28 currency pairs, we have 7 major currency pairs and 21 minor currency pairs. Simple. So is that clear? Yeah, it's really technical, so you need to really get it. Yeah, we have 28 currency pairs. Minor currency pairs are pairs that are not traded against the USD. Thank you so much, Kiki. You're really helpful. Have we gotten that? Okay, great. Okay, perfect. So we have looked at the introductory part of forex trading. We have looked at Okay, great. So we've looked at the introductory part of forex trading. We can now define forex, define trading, and define forex trading. We have looked at the advantages of learning how to trade, and we have looked at what we trade in the forex market, which is currency pairs. Now let's look at key concepts in forex trading, that is defining some terms, some forex jargons that we as traders will be using regularly. So let's take our next heading, key concepts in forex trading. Key concepts in forex trading. The first the first key concept is a peep. A peep. I know most of you must have heard the reconnecting. Okay. I know most of you must have heard about peeps. A lot of traders say I caught 100 peeps on gold. I caught peeps. The peeps pay my bills, stuff. Yeah. So I am here to tell you guys what peep is. So a peep is the smallest movement on the chart. A peep is the smallest movement on the chart. Just like how you can count the number of steps you take, Just like how you can calculate maybe distance in kilometers on the forex chart, right? We don't have steps, we don't have kilometers, we have pips. So a pip is the smallest movement. It's the distance between one position and another position on the chart. Simple. So that's what a pip is. Are we there? For example, let's say we are trading a major currency pair like USD card, and the market was at 1.2000, that's 1.2 thousand, and the market moves to 1.2002. How many pip has that market moved? Example, let's say we are trading a major currency pair like USD card, and the market was at 1.2 thousand, and the market moves to 1.2002. How many pips has that market moved? um Redirecting it back to our definition of pips as the smallest movement on the chart from one position to another. Yes, 2 pips. Samuel, great. So the market has moved 2 pips. That is from where the market was at to where the market is at. The market has moved 2 pips. 2 pips, Samuel. Yeah, right. Because the market was at 1.2 thousand and the market has moved to 1.2002. So that last digit is the number of pips. Simple. So the pip is the smallest movement on the chart. Another example, let's say we are trading a minor currency pair like AUD card, and the market was at 1.1.3 thousand, and the market is at, alright, the market moved to 1.3010. How many pips has that market moved? If we are trading a minor currency pair like AUD card, the market was at 1.3 thousand and the market moved to 1.3010. How many pips has that market moved? From your answer, I will know if you guys have gotten the definition. 10 pips. From your answers, I'll know if you guys have gotten it. Okay, Nalis has said 10 pips, Samuel 10 pips, EM Forex 10 pips. I am clapping for you guys. You guys are grasping it and I'm so happy. Yeah. So the market has moved 10 pips. So we now know what a pip is. April, good job. So we now know what a pip is and how to calculate it. David, right answer. Yeah. So our next key concept is lot size. Lot size, LOT, lot size. So what is a lot size? So for now we are just having like, okay, the basics and all. When we proceed with our lessons, we'll actually start seeing the chart. We'll see how to calculate these pips, how to use the lot size on our forex chart itself. Yeah. Are we there? Are we there? Lot size. So we are now talking about lot size. So what is a lot size? What is a lot size? Now, young bearer 5 pips. What is a lot size? Now, our lot size is our trading volume. So a lot size is the trading volume. So your lot size determines the amount of money you make or lose on a particular trade. So your lot size is like your trading volume. And we have different types of lot sizes. We have different types of lot sizes. The first, we have standard lot. The first type of lot size we have is standard lot. So standard lot size are often referred to as lot size 1. Standard lot often referred to as lot size 1. And one pip movement is $10. Standard lot is often referred to as lot size 1, and one pip movement is $10. $10. It means if you place a trade and the market moves 2 pips and you are using lot size 1, standard lot size 1, and 1 pip gives you $10. If your trade has moved 2 pips, you make $20. Is that clear? Is that clear? So we are discussing lot sizes now. We have different types of lot sizes. The first, we have standard lot. So the standard lot is often referred to as lot size 1. And 1 pip gives you $10. 1 pip with standard lot. Please come again. What is a lot size? A lot size is your trading volume. So lot sizes are like trading volume. It determines the amount of money you make or lose on a particular trade. Right? And we have different types of lot sizes. The first is standard lot size, often referred to as lot size 1. And 1 pip movement gives $10. It means you place a trade and the trade goes in your favor 2 pips. That means the market moves 1, 2 in your favor, and you are using standard lot size 1, and 1 pip gives $10, you make $20 because the market has gone 2 pips. So the number of pips with the amount that a pip gives you the amount you make on a particular pair. Are we clear on that? Are we clear? Okay. All right, great. And now standard lots, right? Standard standard lots, right? It's often referred to as lot size 1, right? So it is lot sizes greater than 1. Meaning lot size 2 is a standard lot. Lot size 3 standard lot, lot size 4, lot size 100, those are standard lots. Now if lot size 1 gives us $10, now if you are using lot size 2, how many dollars will you make per pip? 5 pips gives $50. Perfect, right? If you are using lot size, wait, what has this person said? If you're using lot size 1 pip gives you $10. If you are using lot size 2, 1 pip gives you $20. If you are using lot size 3, 1 pip gives you $30. If you are using lot size 4, 1 pip gives you $40, and so on and so forth. 10 pips equal $100. Yes, when you are using lot size 1, because 1 pip gives you $10, right? Now you multiply the number of pips with the amount that 1 pip gives you. It's simple multiplication. Is it clear? I'm getting it. Have we understood standard lots? Okay, if you have understood, question. If we are using lot size 5, if we are using lot size 5 and the market moves 2 pips, how much have we made? If you have understood standard lot sizes, if we are using lot size 5 and the market moves 2 pips, how much have we made? Nali says $100. Right answer. Right? If we are using lot size 5, 1 pip gives us $50. Meaning if the market moves 2 pips, it's just 2 times $50 that 1 pip gives, which gives us $100. Are we there? It's very simple, but somehow technical. $100. Good, good. You guys get it. You guys get it. So our class has been going on for an hour. But let's finish with lot sizes. So that's all about standard lot. Now the next type of lot size we have is mini lot. So we have standard lot. The next we have is mini lot. So what is a mini lot? So mini lots are often referred to as lot size 0.1. So mini lots are often referred to as lot size 0.1. excuse me, lot size 0.1, and 1 pip movement is equal to $1. $1 rather. 1 pip movement is equal to $1 with mini lot. 1 pip gives you $1. Now, assuming that we place a trade on a major currency pair like USD JPY, the market moves 5 pips, and we are using mini lot 0.1. How much are we making? How much are we making? If we place a trade on USD JPY and the market moves in our favor 5 pips, and we are using mini lot 0.1, the market has moved 5 pips, we are using mini lot 0.1. How much are we making? Remember, with mini lot, 1 pip gives you $1. With mini lot, 1 pip gives you $1. So mini lot is lot size 0.1. 1 pip gives you $1. Now, we have placed a trade on USD JPY. The market moves in our direction 5 pips. How much are we making? Nalis, $5. Right answer. April, $5. Right answer. So we are making $5 because the market has moved 5 pips. And with mini lot, 1 pip gives us just $1. So you take the number of pips that the market has moved, which is 5, multiply by the amount that 1 pip gives, which is $1. So 5 times 1 gives us 5. Is that clear? Now, assuming $5, you guys get it. Now, mini lot goes right up to lot size 0.9. Mini lot goes right up to lot size 0.9. So lot size 0.1 is a mini lot, and 1 pip gives $1. Lot size 0.2 is a mini lot. 1 pip gives $2. $2. Lot size 0.3 is a mini lot. 1 pip gives $3, and so on and so forth. Is that clear? So assuming you place a trade on, let's say, a minor currency pair like GBP JPY, and the market moves 2 pips. The market moves 2 pips, and you are using lot size 2. Lot size 0.2. Sorry. You know that with lot size 0.2, right? If the market moves 1 pip, you make $2. Perfect. April, you get it. It means you guys are actually getting it. So that's it for mini lot size. So if you're using lot size 0.9, if the market moves 1 pip, you make $9. Now is very good. You guys are getting it. So have you guys understood standard lot size, mini lot size? Because we're about to have the last, which is micro lot. Who is saying $100? Okay, understood. Great. Now the last type of lot size we have is micro lot size. Micro lot size. Okay, great. So the last type of lot size is micro lot size. So the micro lot size is often referred to as lot size 0.01. Lot size 0.01, and 1 pip movement is equal to 10 cents. Micro lot size. Perfect, Samuel. Thank you. Micro lot size, often referred to as lot size 0.01. 1 pip movement is equal to 10 cents. It means if you place a trade and the market moves 1 pip, that is 1 step, you make 10 cents. The market moves 2 cents, right? You make 20 cents. So that's it with micro lot sizes. And 10 cents, right? How many cents make $1? 100 cents make $1. It means if you are using lot size 0.01, right, you need the market to move 10 pips before you make $1. Because if the market moves 10 pips, you are using lot size 0.01, 1 pip gives you 10 cents. So 10 cents times 10 pips gives you 100 cents. And this 100 cents make $1. Again, lot size, yes, 100 cents make $1. Perfect. Yeah, and if you're using a micro lot like 0.02, 1 pip gives you 20 cents. If you're using a micro lot like 0.03, 1 pip gives you 30 cents. So on and so forth, right up to micro lot 0.09. 1 pip will give you 90 cents. So that's it. Simple. So have you guys understood what a standard lot size is, what mini lot sizes are, and what a micro lot size is? We'll definitely get there. So we actually have like a scheme of work. So today was the introductory part, and succeeding classes we are going to have our strategy class where you see us implementing all of this, because everything that we are learning now will help us when we are trading. So we need to first of all understand the core basics before we get to strategy, because we will need to work with lot size, we will need to work with number of pips, we will need to work with the different currency pairs. Yeah, so we're having all these basic now to prep us for our strategy lessons as we succeed with our lessons. So we'll end with today's class here. We've been on for I think an hour plus. So if there are any questions, kindly ask. We have like 5 minutes for questions. Then we get to conclude, then continue tomorrow. So questions, please ask. Any question, contribution, recommendation, kindly state it now. If you have any question, just ask. How to create account, please. Okay, Etabate, are you in the Telegram channel? Because the link that you need to use to create your account is in the Telegram channel. Remember, it's completely free. right? So in the Telegram channel, you have the link there. You click on the link. The procedure to create an account is actually very simple. It's just on screen. You just read and you know what to do. You just put your name, your country, phone number, and that's all. So do well to join the Telegram channel. I think the link is in the bio of my YouTube videos. So you just create your accounts and get ready. You said liquidity in exotic currency pairs is minimal, right? Does it mean the market doesn't make profit or how? Okay, it's exotic. They spell it as EXOTIC, right? Okay, now when I say exotic pairs, they have low liquidity. It means the market does not really move. It means there's not a lot of money in the market. You can actually trade it and make money, but it's very slow. Because how many times do we exchange our okay, let me say I'm a Cameroonian. So how many times do I swap my France to get USD? It's rare. It almost never happens, right? So the money available in that particular market is very little, it's very minimal, it's very slow. So you can actually trade it and make money, but the market moves just small because the first market either goes up or goes down. Yeah. So when trading exotic pairs, the market is very slow. The money available there is too minimal. So any other question? Any other question? I think I understand. Okay, that's great. My account is set na capital. Don't worry, you get capital. You definitely get it. Thanks for the brief explanation. Okay, you guys are welcome. You guys are welcome. You guys are welcome, and thank you guys for being here and learning from me. I am so delighted, and I hope by the end of the class you guys will actually get what forex trading is, and I must have shared my trading strategy with you guys, and you guys will be ready to milk the market. Remember, the market runs $6.6 trillion in a day, so I want you guys to have your fair share of that. So our class is completely free. So tomorrow, tell a friend to tell a friend to tell another friend to join. Kindly subscribe to my YouTube channel because we'll have this class, I think, for 5 days, because the pace at which we are going and how smart you guys are getting it fast, and the 7 days might be too long, so we might cut it to 5 days. Yeah. So I'll see you guys tomorrow. We'll talk on the other topics, and that will be all. Are there risks in exotic market high? Mm, there's risks everywhere, right? But with exotic pairs, it's somehow slow because the market does not really move, right? So in forex, you expect the market to either go up or to come down. But with exotic pairs, you see the market just on the same position. Like it's just like this. It's just like this. It's not going up. It's not coming down. It's just like this, right? So the risk there is low, as the profit there is very low too. But with major currency pairs, you see the market moving like this, moving like this, moving like this, going like this and stuff. Yeah. With minor currency pairs too, you see the market moving. But with exotic pairs, it's really slow. Yeah. So I'll see you guys tomorrow. Thank you guys for being here. Thank you guys for listening to me. So tomorrow you guys will learn more. Trust me. Much love. Bye guys. How do I end this? Okay, yeah. Bye, Nalis. Okay, let me try to call your names. You can rest and prepare for tomorrow. Yes. Dara, I want to see you tomorrow. Nalis, tomorrow. Young Bera, tomorrow. Deroland, I'll see you tomorrow. Kiki, I'll see you tomorrow. Who else? Eta, I'll see you tomorrow. Calist, I will see you tomorrow. April, this is me marking attendance. Newa, Etema, Awa, you guys are a lot. So I'll see you all tomorrow. Samuel, EM, I'll see you all tomorrow. Thank you guys a bunch for being here. Okay. Bye. You're welcome. See you tomorrow.